There was a thought I had the other day. I was pondering to myself, why didn't I start sooner? Why did I only dabble in what it was I was trying to accomplish? So, on this channel, we've talked mostly about money, and I wanted to bring it back to its roots. Let's talk about investing. Most people are scared to start investing. I was too, even though I dabbled in it. I never took it as serious as I really should have. But the truth is it's not really complicated, and people like to overcomplicate the process. It's just a bit uncomfortable because when we grow up, we're taught not to discuss money like it's a little taboo. You keep getting taught the more money, more problems, or don't bring that up. Money doesn't go on cheap. Like all this stuff. You just get brainwashed into thinking that discussing money is not important. And the reality is like, you should. You should always talk about it. And if people are uncomfortable talking about it, that's a them problem. People who are successful discuss it. It comes up in topics. They talk about investing. They talk about business, and it's a part of life. It's something that we should be more comfortable doing. But I wanted to touch on this video to go through a few things of like things I wish I knew before I started myself, right? So here's what I wish I knew before I started putting like real money into the market. And I wanted to touch on a little bit why most people don't start to begin with. And what I've seen from my experience and conversations with friends and family is, one is it's a fear of losing money. When you just leave cash in the bank, it becomes less valuable. If anything has taught us in the last 5 years is that $100 does not get you as far as it did even in 2020. Therefore, you are at a greater risk if you look at the returns of the SPY over the last 5 years of losing money by not having money in the market than you are having it in the bank. One. Two, you think you need a lot of money to begin with. And this is what I hear a lot from most people. They're scared because they need 10,000, six figures, whatever it may be to get started. When in reality, you just need to start with whatever you can start with. And the earlier you start, the better off you're going to be, because then your money can compound over time. In another video, I'm going to show you guys some of the SPY returns over the last 20, 30, 40 years. And I can tell you, it's usually green. Yes, red happens, but if you didn't touch your money, you were fine. And it bounced back and then some, and has continued to climb. If 2025 isn't a straight example of that at this point, despite the dips that we've experienced, April ended up being a pretty good month overall. Next was waiting for the right time. People think they got to wait. They got to wait. They got to be in a certain position to get into this. And action is difficult. You just need to jump. Action is the biggest part. Once you get started, the better off it's going to be. You don't need to overcomplicate it. It leads me to the next thing. You are overanalyzing the situation. There are a lot of different types of investors. There are investors who will just play stocks. There's investors that will play mutual funds. There's investors who will trade options. And then there's investors who will just invest in ETFs. If you are someone who is on the fence, an ETF is probably going to be the best route for you. I like ETFs. I don't love ETFs. I think they are a shortcut, and I think we should take our money more seriously, and we should do the research that we should do to put our money into something, to take responsibility for our money. We shouldn't be scared of our money. We should know our money. We should know what it's doing, where it's going, how it's breathing, and how we're using it every single day. But you don't need to think too hard. I used to tell myself I'd invest when I had more money, and I think that's part of the reasons why I hesitated for so long. But I think it was really just the discomfort piece that really just held me up. Let's talk about a few more things that I wish I knew. If you only have $100 extra that you can afford to invest, just do it. If it's $500, do it. If it's $50, do it. If it's $1,000, do it. Invest it, or at least start the process of researching the stocks you want to get into. There's a lot of really easy ones that you can jump into and start getting turns. Some of the ETFs that I mentioned, you can jump in the SPY, you can jump in the VU, you can jump in the SMH. SMH is good because the semiconductor market's pretty good. You don't need to pick the next Tesla. It's about just getting started sometimes. And the consistency will breed results. Next would be investing in what you understand. if you like the company, that's a good place to start. Do your research, understand it a little bit more, and jump into it. There's no reason not to. It's why I am big on some of the stocks that I'm into. IREN is one of my biggest holdings right now, and I love it, and I keep growing it because I think that there's potential down the line, and it's not a super expensive stock right now. This is not financial advice. It's just I've done my research. I know what they stand for. I know what they're building. Even if the market doesn't know, I'm trying to see where the market is going, right? So what do you do once you get into the market and you start moving, right? So this week, I jumped in with, I ended up doing about $1,500 in the market this past week. A large chunk of that went into IREN. I had a goal that I wanted to get to in terms of share total with that company, and I did that in lieu of the fact that the market is turning and I wanted to ride a bit of an upswing. It still might dip back down, but honestly, with the price that it's at, it's still well in the buy zone of what I'm comfortable with this stock because I think it is still severely undervalued. So I couldn't sit on the sidelines and wait. I waited for more of an uptrend to come back in before I ended up jumping back in. My approach really just laid in the levels that I saw on supply based off of fib retracement of where we were. The stock dipped down. I saw an opportunity. I bought some there. And then as I started to see the uptrend coming back in, I realized I probably wasn't going to get lower right now. Granted, we still might. And I was comfortable in the buy zones in the sixes, which is where I'm sitting with the chunk that I bought this past week. So my target has somewhere been between 5 to 7 for this stock. And I think it's a really good range because its all-time high over the course of the last year was already over $15. And I'm expecting it to go up higher over time once people start to realize what the stock means, right? So my goal over the course of this year into next year is hopefully to get into six figures. Right now I'm in the mid fives. I got a ways to go to get to that big, but I'm hoping if the market swings in the direction that I expect it to go, it'll push up. I'll take some profits and I'll stack it and I'll wait for the market to come back to where I want, which is another piece that I really do want to touch in on is that some people like to just buy when there's an upswing. Excuse me. That is not the time to do it. I know it is scary when the market is down that you are scared to buy then. Why do you think you feel the reverse when the market is up? That you're like, oh yeah, I want to buy now. That's emotions. They're playing tricks on you. You're feeding into the fear and you're jumping into the success thinking that's what it's going to be. We all think we're invincible all of a sudden when the market still keeps going up. That's not the way. When the market was bleeding in early April, that was the time to buy. If it bleeds again, that is the time to buy. You should always be looking at those stocks that you are interested in. And if you haven't started getting interested in stocks, you should. And as the time goes and you buy low, what's the Warren Buffett quote? You buy when fear is at an all-time high and you sell when the greed is palpable. I've added palpable there, but that's a fact. It hasn't changed. And the amount of people that I was talking to that were scared to get into the market when it was red truly blew my mind. That's when you want to start jumping in because the odds of you, even if it dips more, the odds of that getting back to where it was is quicker. And you have more ability to scoop up more shares at the cheaper price. All right? So don't be a fool. Don't wait to invest. Get into the market. Do your research. But Kyle, it's going to take time. But if you want to retire and you want to have a nice nest egg, you don't want to rely on your 401k and your IRA for that reason. That's just going to keep you waiting until you're 70.